What is going on, everybody? Is JEPI and JEPQ still relevant in today's time with so many different type of covered call funds out there? Are these obsolete? Well, let's get into JEPI and JEPQ. And this was my original plan was to go 5 years and just buy JEPQ and JEPI and see where I would be in 5 years. However, I got off that track. I did some high yield crap for a while, this and that. And but still, that was my original plan. I really thought these are great, and I want to get into it. One great thing about them is that JEPQ or JEPI have never made any fundamental changes to their core investment strategy. How many funds out there do we see will change their strategy after a year, after 6 months, after 2 years, whatever, because their initial strategy didn't work? So whether the folks at JP Morgan know what they're doing, whether they back tested appropriately, whether they have great traders, or all the above, they've never had to make any changes. And I think that's fantastic, because if a fund's having to make changes after a year to its core strategy, for me, that's a red flag in my opinion. But some people don't think that's a problem, so it doesn't matter. It's whatever. So here's JEPI looking at his chart from inception, and I have a lot of comparisons, guys, and a lot of charts I want to get through, so I'm going to try to speed through this as quick as possible and talk about it if it's still relevant in today's time, meaning these two funds. So here's JEPI's chart from when it came out. This is a weekly chart, and you can see there it came out in 2020, and it started off around $50. Now, if you look at the SPY chart from the same time frame, quite a dramatic difference here in the chart. So you can see that there's definitely a lack of growth, and it's not necessarily even following SPY or the S&P. So there's that. It definitely has some lack of growth, but that doesn't mean it's not still relevant, and we'll get into that here in a bit. Here's JEPQ. It came out 2 years later than JEPI. And if you look at their chart, it's a little better as far as following like the Qs. We can see that here. It's a little better. And so you like to see that. You like to see it trying to simulate somewhat what the underlying or like an underlying is doing, like in the Qs. So here's JEPI. We're just going to look at it initially, and then we'll get into some comparisons. Max all time, it is up 15% in share price. I love that expense ratio of 0.35%. Some call it basis points because they're fancy, but we'll call it 0.35%. And they pay out monthly, and that beautiful 8% yield, which is totally sustainable, and you can see that. You will see that here in their total returns coming up. Here's some of their underlyings that they hold, and it's a pretty mixed bag and a pretty balanced type of portfolio, and you can see that here in their sector allocation. So they got other. What other is, it's a lot of other stuff and tech, of course, and just a lot of different things to keep this fund really balanced. Here's your distributions through time. Lowest at 25 cents. Currently, it hit 34 cents. So the distributions do go up over time. And even if you look at the chart here and you had to draw a trend line, you could see that they go up over time. Lower lows or higher lows, and hopefully higher highs for JEPI in the future. Now, if we go over here to JEPQ right quick, JEPQ is up 17%, and it's been out 2 years after. It came out 2 years after JEPI. So, yeah, you can see the power of the growth of the NASDAQ here with it up 17% share price alone. And sector allocation, of course, heavy tech. And here's just their top 5 holdings here at the bottom. I'm going to speed through this so I can get to these comparisons. July 1st was its lowest distribution at 34 cents, and its most recent distribution up there at 55 cents. And again, if you draw a trend line, you could see that it does go up over time. It pays a 10% yield, which I think is more than fair for a NASDAQ-related type of fund. They do pay monthly. Here is JEPI's total return from inception, 84.92%. So here's one way to look at it, and that's with dividends reinvested. But if we go and you want to keep every single distribution from when it came out, its total return is 69%. And just to me, I think that's fantastic. You know, if you just wanted to live off the distributions, you would be up 69%. So I think that's great. You know, you're not looking for the growth that these provide. Now, what you will see as time and history has gone on and different funds have tried to mimic JEPI and JEPQ's model, and they've actually improved upon it. And I think that's what happens as time goes on. People see a product, they think that's great. How can we improve it? And you are seeing that with SPY-I and GPIX. So does JEPI underperform the two newest type of competitors? Well, yes, absolutely. The chart says it here. That doesn't mean it's bad because it underperforms. The reason why I think JEPI and JEPQ, before I get on with the rest of the video, is still relevant is because particularly JEPI has gone through bear market. It's gone up and down and all kinds of different market conditions. And I think you could feel safe holding it. At least I would personally. But if we compare here to SPY-I and GPIX, total returns, you can see here as of November 28th, it's lagging behind GPIX and SPY-I. But check this out. Dividend growth. You got to love to see it. JEPI up there leading the pack as far as SPY-I and GPIX is concerned. From when they all came out together, you could see here that it's up 11% in dividend growth. That's fantastic. Price change, since they've all come out together, you can see it lags the other two. And you can see right here how it really doesn't have much growth associated with it. As a matter of fact, it's negative on price change. Meanwhile, its underlying, like the Qs, have totally ripped. So there's that. So if we look at JEPQ here, and we want to look at its total returns, if you kept every distribution, you're up 51% all time. I think that's fine. I mean, I think it's fantastic. And if you kept all the distributions, you're up 69% total return. So let's compare JEPQ to QQQI and GPIQ, and you're going to see a similar tale that we see with JEPI. They're underperforming the iterations iterations of like QQQI and GPIQ. And you can see here total returns for the past year, it lags behind QQQI and GPIQ. Does that mean JEPQ is bad because it underperforms the other two? No, it doesn't. It just means it underperforms. That's all. And it's not a slam against anyone that holds it. So please, these are just charts. Don't take it personal. But anyway, I digress. You have to say those things because people take charts very personally. If you look here at dividend growth, look at that. JEPI and JEPQ have both better dividend growth over the past year and max all time than QQQI and GPIQ. And I think that's fantastic. That's what you want to see out of your cover call funds. Do the distributions go up over time as the market goes up? And it most certainly does. If we look at price change, again, it lags the other two, and this is just for a year, but it's not too far behind QQQI or GPIQ. So I think JEPQ and JEPI, honestly, I still think they're good. I still think they're relevant. I think you can actually feel safe, at least me personally, not you, but me personally. I still would feel safe holding them. I just think QQQI and GPIQ, just for me personally, are performing better at this current time. So I'm much more comfortable holding those two. But man, with JEPI, JEPI, weathering so many storms. Let me go back here to its chart here real quick. Okay. Just 1 second so I can kind of prove this point here to you. For those of you that have hung on this long, I'll try to make it worth it. So, it's went through this down year in 2022 and 2023, that bear market year. And it's still positive. And I think that's fantastic. It can weather storms, come out the other side positive. It's going to perform year in and year out. I think they're fantastic, even though they both underperform the current and updated iterations of new products that have come out since these have come out. I hope you enjoyed the video. So Mike, talk to you later.